Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Forex daily analysis for you. It is almost midday in the US markets, and the European and Asian markets are done for the day. We obviously have some geopolitical stuff that's taken the forefront, and as before we get into that, let's just go to our disclaimer just to remind our audience that this is for illustrative purposes only. And now that we've covered the basic accounting, we can go to our live screen and we will take a look and see if we have any questions. We're here at our Twitch page and we have no questions. Anyone that wants to jump in and during the video, leave some questions on our chat, live streaming chat here on Twitch TV under the Forex Trading Unlocked channel, and we'll try and answer them. So with that being said, we're going to take a look at the Forex markets now. So we have the Euro US dollar pulled up, and we're going to take off this little volume section here, and as far as the news, we don't need that. And we can see that the Euro US dollar right now is back on the offer right now. So before we really start to get our breakdown, let's pull up our US dollar, Hong Kong dollar. We know that there's a lot of stuff going on in the news with them right now. During the video. Okay, just want to cover that. Sorry about that. So US dollar, Hong Kong dollar, we're all aware of the recent turmoil that's going on in Hong Kong, and obviously for headlines, markets move lower. Trade doubts resurface, Hong Kong protests drag on Asia. So you can see it right there. UK general election opinion shows Tories stretched up. Okay, that doesn't apply. Okay, so you can see like a balloon underwater, the US dollar started to gain strength against the Hong Kong dollar, spiking a lot over the last couple of days. I would assume that if history repeats itself, and it tends to do when you're dealing with regimes such as what's going on in China, that we can probably count on certain things being following in the footsteps of Tiananmen Square eventually and what have you. So this is not a good picture. So this currency is where the US dollar most likely is going to see a very bullish show of strength over the next probably not just a week or two, but probably the next couple months. As you can see that the dollar has been very strong in this turmoil, and even with the trade wars, it doesn't matter. I think you're going to start to see a big lift with this currency. The Chinese yuan as well. Now we're getting more mainland. You can see that this one here is also not quite as volatile, and it is also going in that way. So the bulls definitely, I think, are building a base in these for the dollar versus the CNH as well as the Hong Kong dollar. You can see that here we have made basically a corrective slide, and I think that this low that we've set down here on the month, this is probably it. This is a big deal. This is a big reversal right here. So we're only at mid-month, and I think you're going to start to see a really positive lift in these in the dollar versus these two Chinese currencies. So even if they try and do some sort of fixing or whatever, it doesn't matter. I think that you're going to see the bulls run with this. And this is irrelevant. Even if the dollar index starts to go down, which I believe the US dollar index probably will be under a little bit of pressure and set up for a little bit of corrective profit taking over the next few weeks as we head into the holiday markets and into December. But not so for these. I think these two, if you are looking for a buying opportunity for the dollar, I think it would be definitely within these two currencies. And that would be trade deal or no trade deal, just because the protests aren't going to stop. So it's not going to be until either the Chinese government caves, which is not going to happen, or the students give up, which is not going to happen, or obviously they come to some resolution, which that's not going to happen. So it's not going to end well. All right, so with that being said, we don't need to talk about politics. We're just looking at the drag on the markets. So that's where the dollar is getting a lift. And you can see the dollar is getting a little lift in the euro as well right now. We're going to pull up the British pound. Let's see what we got here. So the British pound has been wedging, and you can see that this is pretty much unchanged on the day. It's kind of scary when we have markets like the pound and the euro that are getting so tight, and they don't seem to want to move. Okay, let's see if I can, there we go. Okay, now that's, okay, so here we have our breakout range pretty much for these markets. So we have this last swing high, this last swing low. Until we get above or below here, I think you're going to be looking at a wide range trade. Now for the euro US dollar, should the dollar index start to erode, which I believe it will, we'll start to see a turnaround. But right now, this market's a bear. It's laying on support. The only thing that scares me is that it's been laying on support for days and it really doesn't have very much of a range. So for this market, I think that as long as we stay below this last swing low here that we've taken out and now made this newer move low, which now is indicative of a bearish trend, I think that you're going to have to just stay with the trend right now and be very careful buying into this market. I would wait for a reason. There's, with all this economic news that's flying around and even the geopolitical stuff, for some reason the pound is going sideways and the euro doesn't seem to want to do really anything else as well, which is very interesting. It's not very normal for how this market typically behaves. So that being said, we're going to now look at the US dollar Swiss and see if we can get a better gauge on what's going on in Europe. So it looks like we don't really have any opportunities as far as the pound is concerned versus the dollar. And with the euro US dollar, unless you're already short and keeping it tight, I don't know, I would be very careful buying into that, even though I am looking for an opportunity, but wait for the signal. And here, maybe this is the signal. We have the US dollar Swiss right here, where this is falling apart and it's on its lows. So we have something that's going, it's very interesting. We have the Chinese markets, obviously, where the dollar is strong. That's pretty much a fundamental reason because of what's going on politically, not economically, even though economic factors also are weighing on that market as well, or both those markets. And then we have the pound and the euro that are in this Brexit tug of war, and they have elections coming up in a month, and obviously they're watching what's going on in the U.S. with the impeachment of the U.S. president beginning, and but you that it would have a little bit more going on, and it doesn't. So, but the U.S. dollar Swiss, this does. Now let's take a little bit of a note of comparison here. So the U.S. dollar Swiss, I would say this last swing high would be your line in the sand as far as if you want to be bullish. Above here, I think you get a breakout to challenge parity once again, but you can see it's been rejecting parity for so long, and this is a swing low as far as I'm concerned. We had this trend higher. The market is in an overall uptrend, but now it's gone sideways. If you look at it for the past basically month and a half, 2 months now, the Swiss has been in a range trade between 98.5 and just above parity here. What is it? Parity 25, basically. So basically, in a $2 range is where this market has been trading, and is where it's, looking at right now as far as any activity. Now, the funny thing about this activity is, look at today's trading. The high is 99.35 and the low is 98.90. So let's see, that we have is a 45 point range in the US dollar Swiss. Looks like it's actually got a little action going on, at least for the way the ranges have been, it is. And now let's go back to the euro US dollar. Now this one versus the euro versus the dollar is going the other way. It's actually weak versus the dollar versus the Swiss, which is strong. However, it's not that weak, and then it's only slightly lower. Now let's look at this range here. We have a high of $1.1020, and we have a low of $1.0999. So we have a 21 pip range in the euro US dollar. And now let's go back to that Swiss. We have the US dollar Swiss, which has, once again, we have over a 40 pip range. So how is that possible that we have that kind of activity? We have almost twice the volatility in the Swiss versus the euro against the dollar. Considering there's nothing really going on with Switzerland to really shake it up, that is very odd to me. To me, that's a signal. That's showing that there is dollar weakness that is really starting to eke into the factor as far as where strength lies against the major currencies. And so if US dollar Swiss is weak, let's see what the US dollar yen is doing, because they've been pretty much following dollar strength for a while, and if dollar weakness really is coming into play and they're in tandem with each other, then the dollar index, it would reason to be that would start to sell off, and this would weigh on the other currencies giving them a positive lift and giving them a chance to get a rally going on. So The US dollar yen, look at this market. This one is lower. So how is it that the dollar is gaining strength in Asia, but it's falling apart against Japan? And it's also falling apart against the Swiss. Well, the yen is a flight to quality in that region. So you could see where, especially where they're selling probably a lot of Chinese yuan and Hong Kong dollars, they're buying dollars, they're also buying yen. Apparently they're probably buying more yen than dollars, I would think, as far as when it comes to any other currency. There obviously doesn't seem to be a run on the pound or the euro when it comes to these markets, which we could also look at the other different currency crosses for that as well, which maybe that might be something that we should do real quick. So since we have, let's see, let's look at the pound versus the yen real quick, or the euro versus the yen actually. Let's see, here we go, the yen, and here we go, the euro yen. So the euro yen, let's see if we're going to have any movement in this market or not. Since the euro won't move against the dollar, let's see if it'll move against the yen, considering that the yen seems to be strong against the dollar. Then you would think that it would probably be strong against the euro right now. So I haven't looked at this today. So we're trying to get a gauge of strength for the euro and the yen against the dollar by looking at the euro yen. So according to this one, I would think that it should be lower if those currencies are trending in the correlation. And it is. The euro yen is lower. Okay, so this looks weak. This one definitely looks weak. So that's yen strength. So if the yen can have strength against the euro as well as the dollar, then it's a strong market. It's going to be strong. Those are two major currencies that are giving lift to that market. So that being said, we're going to look at the US dollar, Hong Kong. It's not the Hong Kong dollar side, excuse me. We go back to our US dollar yen trade. So that being said, if the yen really is starting to gain that kind of traction, then I would have to say that you have to take that as one real good key indicator as to which way to go with these markets. That being said, the US dollar yen is probably going to enter a bearish phase. Now, are we being a little presumptuous and trying to pick a top? Well, we're not trying to pick a top or a turn. It's just the fundamentals are showing that we're probably going to have a turn in this market. Do we have anything here technically that might give us that? Well, yes, we do. We have this low here, which would be our point of, maintaining this higher move low, which right now we are. The market's correcting, but it's still above this 107.84 level. So as long as we're above that level, we're going to stay in a positive mode. So this will be pretty much our line in the sand as far as direction. And then we will have, let's see, so anything above or below, that is our bias, our trading bias for the US dollar yen. Looking for strength to be maintained in the yen because of the way it is with the euro as well as with the dollar and with the other points of where those markets are at. So let's say that this, for hypothetical reasons, let's say that we're probably right on this trade. So then we have this high, obviously, which would be our next major breakout point to the upside. Any trading above this high means new move highs, a resumption of the trend for sure, and the bulls have control, obviously US dollar strength prevailing, which it has as of late, even in the midst of a breaking dollar. So it's weird how the US dollar yen has actually been relatively strong for quite some time. Now this may be the inklings of a turn. So maybe we have a head and shoulders that is starting to form here. We could have where this right here would be the shoulder, and then right here we have the head, and now obviously we would be looking for some sort of potential formation within this range here that would start to form a head and shoulders pattern. So let's see, we'll go back to this. So you could see basically where the market might trade down like this, kind of come back up like this, and then that would be where it starts to trend and go lower, obviously, from that point on. And, whoops. All right. Okay, so that being said, let's make it a little clearer with the arrow going down here. I can put in, let's see, here we go. And we'll just Pull that a little bit lower. Okay, so this would be a potential head and shoulders formation, and then obviously we're getting a little ahead of ourselves. It has to wiggle and jiggle like this, but this would have the US dollar yen in a sell rally forecast if a head and shoulders really is, and then that would have us come back down towards this pivot point here, meaning new move lows after having made a higher move high. We all know that after a higher move high and you make a lower move low, at the very least that would be signs of a neutral to lower trade in the short-term future. And right now we're going to roll with that one. Let's see. Let's look at the US dollar CHF again. So now remember, we were having issues with parity, correct? So rejection, 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 rejection. So if this is the case here, then we are definitely looking for a test of this low right here. So now we have, we made off of this low here, we had a higher move high, higher move low, higher move high. But if we look at it on this basis where we have a higher move high for this trend, here we have this swing lower move low. This is a lower move high in relation to this. So I think what we're going to do is we're going to have our bias here for this wedge would mean that we have this downward sloping resistance now, which is guiding our trend. So we are no longer looking to be a bull with this market unless we can get above this trend line right here. So this is the key. It has to get above that. If it's not, then this is where the downward basis and resistance is going to start to wear on this market. So here we go. This downward sloping resistance now becomes our base. And then we also have this, because we have the lower move low, and here we have a higher move low. We need to figure out what's going on here. So we'll move it, actually, we'll move this arrow down to here. So anything there, obviously, we have a breakout, and then anything that would be, oops, and then obviously failing from this pivot here would be another sell signal, and then this, a rally above this other pivot obviously would be a buy signal. So for the US dollar Swiss, you have your wedging trading that's going on now, where I think has more of a negative bias, and I think you're going to have a challenge. A test of support before you have a challenge of resistance. These are areas I would be very cautious of and pay attention to as we start to move forward into the rest of the week and move into next week. Are we going to wedge sideways and start to become a grind of a trade? Very difficult to say. With the US dollar Swiss, this has actually been swinging around. It's not looking like the Euro US dollar, which has been, just slowly eroding over the past week and a half, actually 2 weeks now. But this trend here, if the US dollar is going to start to fall apart and collapse, that has to give some sort of lift to the dollar, and right now we're kind of into this. If you see, this is like a good support area right now, where I would say that today could be where we start to see some bottoming action going on. We may even see a little bit of a turn to the upside. I think the bulls have a little bit more of a chance of getting a move going on now than the bears. Excuse me, I think the bears are actually pretty much done with this move. And then let's look at the pound again real quick. So since we have these other markets that are indicators, we have the pound also, which has made lower move high, lower move low. So right now it's in the sideways to lower mode, but it's going sideways. And now I think it's until you just have to play off these recent highs and lows for your breakout. In between here, as you can see, the range is getting tight. I always say err on the side of caution. When the pound starts getting tight, you know it's going to move. It's going to explode in one way or another. It definitely is going to get just really big gyrations, a sideways rally really hard up towards this level, fail, and then come back down here and just start to chew you up. You could start to see a little bit of trading like it did when it got toppy here, or even when it got toppy here, at least before we may even start to see a breakout move like we had over the past in October, where we trended really strongly for a good week and a half. So those are our trades. Let's take a look and see if we have a question. We have no questions on the chat board. So once again, we'll take a look at the oh, we know what we didn't look at, folks. We didn't look at the New Zealand dollar, US dollar. Why should we neglect that? New Zealand dollar, US dollar. Here we go. This has made a big move today. The Royal Bank of New Zealand did not cut rates. Like a balloon underwater, this market started to gravitate to higher levels, and probably will for the next couple days. Maybe not as extreme, but this is a big shift in their policy. Everyone had been expecting for months for them to keep on cutting rates into the meeting. The fact that they did not do that and they were so pushing before tells you that that's a big policy change, obviously. Now, the New Zealand dollar is one of your lesser currency crosses. That does not mean that it is going to start to totally offset the dollar. But here you have one, it is still one of your lesser major currencies. This one is going to be most likely strong against the dollar now for probably the next week or two. That being said, let's look at the Australian dollar, US dollar, and see how that one is done. Now, both of these markets have been in a fairly decent bull market for the past month and a half. The Australian dollar has been correcting. You can see it made a lower move low again today. It's kind of looking like the euro. And with this one, I think you're going to have to look at this little swing low right here as your bias. Trading above this pivot level here, I think, keeps you in a bull market. You got to realize this was a very steep sloping rally that we had going on in this market for quite some time, and now it's like correcting, which is what markets normally do. It's easing off. So this is not necessarily just a turn of events where the Australian dollar is now going to enter a bearish phase. It's most likely just a digestive phase coming off of these extreme rallies that the market has seen. Remember, the Australian dollar, US dollar does have a lot to deal with the China trade war, and it is impacted in its economy as well. But now that New Zealand dollar, US dollar is doing what it's doing, I think you're going to probably see a little bit of a lift. As you can see, it's coming off its lows today, once again giving weakness to the US dollar. So we've covered the Australian dollar, the New Zealand dollar. You know what we didn't do is we didn't talk about the US dollar, Canadian dollar. We can't forget about that one since we've talked about all the major currencies against the dollar. So here we go. The US dollar Canada, look what this has done. Made a spike high today, and it's barely positive on the day. It also has a very steep sloping rally that it's had over the course of the past 2 weeks. So as markets come in or go out just like they came in, you can see how this was a big sell-off in October where the US dollar was under pressure. We know that. All the markets seem to get lifted in the beginning of October through at least the first 2 weeks. This market turned like a couple other ones and has remained in this corrective mode higher. The overall trend for the US dollar Canada is a bear trend. Obviously, the last 2 weeks has been bullish. So now you're coming into the chop zone. Is this going to continue, or is it going to fall apart, or is it just going to go sideways? I think that if the US dollar does start to fall under pressure, which is what it seems like it's going to do against most other currencies, that the US dollar Canada will also do the same. So we've covered the US dollar Canada all the way around the world. I think we've looped it around throughout Asia. We covered all 5 currencies over there. We covered the 3 currencies in Europe, and we've also covered the US dollar Canada. We could talk about the peso. That's had a little bit of a movement lately, but we haven't had any questions lately on that one. So until we start looking at spring break trips and stuff like that, we don't need to start worrying about whether the peso is going up or down, right? So all right, so that being said, we know that we do have a trade that is surfacing here in the Euro US dollar, which is eventually a buy, we think. And then what we do have is we have the US dollar Swiss, which is giving us some sort of clarity on dollar direction. So I would use this as if you're going to look at the European currencies, since the pound is tightening up and you don't know which way it's going to pop. And when it does, it's just going to blow through stops like crazy. So I'd be really cautious with that one. The euro, no matter what, doesn't seem to be excited about anything that's going on in the world and just is a dud for right now to trade. But the US dollar Swiss and the US dollar yen seem to be giving opportunities. So look at these levels. I would say, remember, we have this wedge that's forming. So this downward sloping resistance and upward sloping support is going to be the containment for this wedge. And then our breakout of these pivots, a break below 98.52 definitely has the Swiss on edge, probably targeting all the way down to this 97 even area. And if we get above this 99.79, well, it's just going to be another breakout to try and chop above parity for a couple days and then most likely fall apart. And then we'll just be falling back into this range trade. More of the same is the outlook for this analysis for today. So we don't have any signals yet, but we may have some coming in tomorrow and after today's close. We We do have that bearish engulfing signal that was in the dollar index at the end of the month of October, and we have the bearish engulfing line for a bull in the euro US dollar. We're looking for this break to buy to see what happens. So that being said, since we've mentioned the candlestick patterns, you can always learn more about them by reading the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and also Kindle version. If you're a Kindle Unlimited user, you can just read the book at your leisure anytime you want. I'm not a Kindle Unlimited user, so I don't know exactly how it works, but I guess you can read any book on Amazon page by page at your leisure. So check it out, one of those 3 ways. Obviously, I prefer you to buy it, but or get the Kindle. But anyhow, these are very useful patterns you can use in the Forex markets, the equity markets, the futures markets, the options markets, and we will continue to show you how to implement them as we get different signals along the way. So we'll see how the markets close this evening and be back with you probably later on this evening with a midweek forecast to see if we have any trade setups to capitalize on over the course of the next few days. So with that being said, always you have a plan and use stops to protect yourself in the markets, and check us out and like, follow, and share us everywhere you can, especially here on Twitch with our videos. And you can always find us at www.forex-trading-unlocked.com. We've had a lot of trades and changes to the website. Check it out and have a good trade.